Hey guys, welcome back to the VC Deck Breakdown hosted by Cremorne Digital Hub. I'm Darren, the Community and Memberships Coordinator here at CDH. We're back again for another VC Deck Breakdown, one of our crowd favorites, where we have Hugh Stephens in from Galileo Ventures to break down some decks that have been submitted by our lovely community of founders. Just a reminder, Hugh has never seen these decks before, so the purpose of this workshop is for Hugh to give his unadulterated opinion and first take of what the deck's impression on him is, and we'll also bring along some commentary on the industries that the decks sit in and speak to what someone might be able to do to improve or what they should look out for if they were to be building a deck in that space. But I'll leave Hugh to talk a little bit about what he's working on and the context of that. Hugh?
Sounds good. Thanks, Darren. And thank you again for inviting me along. So hello, everyone. I'm Hugh. I'm one of the partners at Galileo Ventures. We're one of the founders and partners. We're a pre-seed fund, so we invest between 250 and 750K, pretty much from the earliest stage possible, wherever we can. So, I think I keep saying that one of our term sheets once said that you had to incorporate for us to actually do the deal. It's up to, obviously some slightly later stage rounds at every now and then. Sector agnostic, we like to work with really early stage founders. And so the idea of this, as Darren said, is to kind of give a bit of a brain dump of what we think as we read through these things. So thank you to the founders who've submitted the decks. It is obviously a bit daunting to be featured in this kind of context. And I will caveat everything up front saying, I think one of the things that you learn every day in this sector is that, there's definitely no single right or wrong answer. All I profess is to give my particular opinion. So that's all I can really do in that context. So I don't profess this. There are many things that I will say are points of religion in the sense of, no one has a really right or wrong answer, but, everyone has their own beliefs about it.
Yep.
Let me share my screen and we can get going.
And just a quick reminder for the two founders who are getting their decks taken a look at today, at the end of each deck, we can open up the line, because we're both remote today, we can open up the line for you to dial in. There should be an option for you to dial in, and then we can take a look. They can take a look at as in you can reply and have a quick conversation with Hugh about the comments. Okay? Thank
Easy.
You.
Thanks, Darren. Okay, first up, Ovexa. So those who've been to one of these before, I always like the first slide to give kind of a quick overview of what the company does. So good summary of what it does, wearable data and performance decisions for females. Interesting. I sort of immediately go, okay, interesting. Curious to see where the market is, I think, here. I think when I look at this space, obviously there's sort of like the cycle tracking apps are a very busy space. So kind of interesting to see how they're going to do that, as well as obviously, with all of these sort of wearable data pieces, even Whoop and stuff like that has the problem of, competing directly with the Apple Health of the world. So let's dive in and find out some more. Okay, so there you go. So this answers our question of who we're looking at here, right? So we're looking at the track and field athletes. We're looking at kind of, I guess, presumably the pro or the prosumer, obviously elite there. And that being kind of the key market. So that makes sense, and again, it's one of those things where I go, yeah, okay, this makes sense, and sort of helps me. I don't always believe in the sort of like putting things that like it's obvious, it's kind of one of those things that you read it and you go, yeah, obviously, like, cycle phase and things like that are important for elite athletes. But I think this kind of at the same time, while I'd normally say, it's a bit of a waste of time to say that kind of thing, this also gives me that message of saying this is who we're really targeting. So I like it irrespective of the fact that I'd otherwise say otherwise. So the problem, this feels a little bit maybe duplicative to the previous slide. And I mean that in the sense of this is probably the more generic answer, right? But it kind of says the same thing of like what it sort of tells me the piece of what problem you're trying to address. I don't mind it though, but it could be like again, when you're tight on slides, it can be tricky to kind of cut things down. So now I've talked more about this. So here we go. So this is kind of the deeper problem slide. So nothing signal, Yeah, so I agree with that. The first one, decision support. I mean, I think on the second one, it's interesting because athlete specific, maybe not so, but like you look at, and I do actually have a Whoop. Like you look at the way that they're trying to incorporate a lot of their sort of Ask AI type solutions, and they're trying to really get into that decision support piece. And so I sort of go, like I think that's lacking, but yes, it's definitely a focus for the kind of incumbents as well, which are obviously looking at a bigger market. And the third one of the like, how does this translate into training prep? I'm like, okay, interesting. As we get more and more niche, so it's always that tricky thing of how do you balance the nicheness and specificness that helps you get that early cut through with having enough of a big market to be a big outcome. So that's fine. I'm sure we'll talk about that market size later. Okay, so now we're sort of into solution. So we're explaining the cycle, which is probably a reasonable thing to do. So I have a healthcare background, so I have some degree of knowledge about this, at least. Less so necessarily in the athlete-specific context, but at least can kind of talk you through the phases and hormonal pieces. So yeah, okay, this like again makes sense. I think I think the interesting thing for me, one of those questions that I think as I read this slide to flag to the founder is the piece of like how common, I don't know the answer to this, right? It's like how common is it when particularly if I'm an elite athlete like an AIS, Olympic level athlete. How common is it that my existing trainer or trainers are actually tracking this manually, right? And that's always the thing sometimes where it can be an anti-pattern or like a bad sign where you sort of go at the very top level where this thing, either it's not important at the top level or it's important at the top level but no one tracks it, which is kind of like, that could be a problem. Or it is actually done manually and you're going, we're going to actually enable the market, right? So that's where I sort of go, okay, that's one of those questions I want to ask to try and sort of validate the approach here. Okay, so now we're 6 slides in and we're sort of taken a little while to really get to the solve. I like I've explored the depth of the problem there, and I think particularly given women's health is, let's just say, not always persistently well understood by the venture capital crowd. I can kind of see the reason why. But in other contexts, I'd say it takes a while to really get to the solve here. I think when it's fine, I think for a read deck, but it does look visually a bit text heavy in terms of the left bit, and that's again a bit of an aesthetic view, which is that point of religion thing. But like I think you've got to kind of work out the balance between when you're presenting these things, you can often be more sort of narrative and more sort of storytelling-y. And sometimes on a read deck like this, it can be easy to just kind of be short and snappy to get the points across. Because I think the paint the future piece can be a bit like, let's talk about sort of the now element of like, this is what we want to do, this is how we're going to do it, and then this is the sort of like the future vision. But kind of the first point of the imagine the world feels like the phrasing of it reads to me and feels to me a bit like it's a sort of like a bit too world building, kind of directional. Interesting though, like again, like there's obviously 1,000,001 of these kind of apps, I would say, within like the general sports training field, like the weights training field and stuff like that. So I can kind of see the sort of the overlay that you're looking for here. And again, I'm interested to see, presumably we'll get there, of like how you see the market stacking out over time. And also how you see yourself competing with those tools, right? Because you sort of inevitably are always going to, as with the Whoops and the Auras and everything else. Okay, so why? Okay, so I validated the psychology performance stack. I mean, is it Whoop and Aura that have validated that, or is it like decades of research? Because I would have thought decades of research have validated that piece, and I would sort of worry if it's the Whoop and Aura the ones that actually have discovered that, because like obviously female competitive sports aren't exactly a totally new phenomenon. So I sort of go, are we like? I can see as a founder, you're trying to sort of position yourself sort of against as being the next generation of those things. But sort of, I think you need to I would at least separate that piece of saying, assuming it's true, making that assumption, that like we've known this is a thing for a while at the super elite level or even at the individual athlete level, people track it by hand in journals and notebooks and blah, blah. We're obviously enabling the ability to do this at scale. So like, I think there's a different narrative piece there. Category creation, I think that part's a bit more interesting. It's, kind of scheduling intelligence is an interesting one, and like that piece of how do you do that, and how do you do, I mean, even if you think about it now, like the Whoops and Co of how you track someone's mood and energy during a week, could you then overlay a thing of how they train otherwise, whether it's weightlifting or otherwise, like, possibly. I could see it, people are often, either tired or very awake after a weekend or whatever. The need is clear about athletes, content creators is an interesting one to put in there, which has to go, and we may went to most of this, where we're trying to sort of start to squeeze open the wedge here a little bit here. So, interesting. Let's see where we get. Okay, like an ICP, right? So here we go. So this is presumably the early piece. So here's our 2 high value customer segments. Okay, elite athletes, sure. Again, you've kind of already established, I think, this piece of where that makes sense. I don't know how I'm kind of curious how you think you might have sort of tied the revenue. I guess I like availability ties to revenue, but it's a bit of a long bow. Content creator. Now that's an interesting, have a look at this. This to me feels a little bit like we're trying to do it as a way to build a marketing channel, but it doesn't feel as natural a fit. And maybe that's because I don't, have lived experience, obviously, in this context. But I wonder how validated the content creator side of this is. And also there's a big volume of long tail, so there's elite athletes are kind of easy to track and identify and stuff like that. And they're also the prosumer athletes who will pay the money irrespective of them not necessarily being an elite athlete. People who are saying, I want to do my second marathon and have an under 3 hour target or whatever it is. But the content creator piece, I'm sort of it's one of those very, very long tail markets, as is, the others, but you have less of that sort of prosumer tail to it that I think you do in athletes. So this one's a bit less. I can see the marketing angle of trying to use it as a way to then, bootstrap your brand awareness, but feels like it dilutes the message of the elite performance piece. But again, maybe that's one of those things that maybe think about exploring.
What do you mean by a long tail market?
Yeah, so they're sort of right-tailed markets, if that makes sense, or left-tailed markets, depending which way you put the x-axis. Not to be too mathematical here, but sort of you have the piece of where, like running, right? Lots of people run. Not a lot of people, run the, sub 2 hour marathon. Okay. Let alone the sub 3 hour marathon, right? And so you sort of have these markets. Sports are the classic, right? Of where lots of people play football, but not everyone's an AFL footballer. And so you have lots of people in the market, and you look at things like the way that Catapult and all of those sort of sports, the core sports data, and there's obviously the ones in the US for concussion and stuff like that that we also have. Yeah. And same sort of thing of where they start in the elite segment of the AFL, NFL, blah blah blah, and then it becomes the question of how far down the stack do they go. And Catapult, I think, is probably an interesting example to use of where you could put that kind of idea of having on-field player analytics, but you're not going to do it for your under 12 soccer team, right?
Yeah, right. Or just.
But then where's that gap, right?
Yeah.
There's sort of there's the elite social sport people who might be the the VFL equivalent, which is kind of the piece in between. Sure. But you still have this very sort of this piece, and then you have the question of where in that sort of long group of sports players do you really stretch down into? Because obviously the monetization capacity in the AFL is high. And also the need is high, as I'm sure with this solution, the need is highest here, I imagine, for the Olympian level, blah, 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 as compared to the person that, runs twice a week, the need is probably much lower. Yeah. But I can see where the person who is somewhere in between, the prosumer, which is somewhere in between, if they're I'm seriously training for an ultra marathon or, whatever, I've got friends who've done that sort of thing. But doesn't, and the content creator, I think, is even more skewed because obviously everyone under the age of 20 seems to want to be a content creator in their life, which I don't understand, but that's because I'm not under 20. And so I think there's a lot of people that want to be content creators or who generate content, but aren't necessarily ever going to kind of make it, so to say. So you have a lot of that kind of market. And that means they generally have a low propensity to pay. Whereas you look at sort of the elite sports people and things, and they have a much higher, and even I would say some of the fairly high earning content creators have a low propensity to pay, to be honest. So you need a good comment about the physical activity side. And that's where sort of there's overlap between the two markets. I agree with that piece. There is overlap between the two markets, and there are obviously sports content creators.
But I think that sort of mirrors elite athletes. If you're perhaps in the top 1% of female content creators, or just yeah, people who make content in general, your schedule is probably like really demanding. But if you're just like a social player,
and
or
perhaps
like
perhaps the
you're
point of this is
dabbling,
that the content creator market is designed for that content creator group that are the. I mean, I know a lot of, for example, Winter Olympians do a lot of that sort of influencer content type stuff to obviously pay for their Winter Olympics, because Australia doesn't care about
yeah,
Winter Olympics.
mm,
So, like perhaps that's the market they're trying to, but again, it hasn't really sort of come through as obviously in there. That slide to me was a much more generic than necessarily fitness focused.
sure,
So features, AI performance coach. Yeah, sure. Again, we sort of that's one of those like logical things. Forecasting, I think is the interesting one. Like this part 2 and part 3, I think are the ones that I think are actually more interesting. Like the part 1, you sort of go, well, yeah, obviously, and part 2, part 3, I sort of think it's sort of a bit more like, what does that mean? And I think I look at the screenshot on the left. I don't know how I do like it as sort of live demo thing. I don't know if these look a little bit like they might be product mocks rather than necessarily an actual live product. So we'll see where the actual product is, hopefully at some point in the slides. But what I do see in that second one is in this slide here is I sort of go the May shift, the hedging language, and I sort of go, well, it's going to be one of those like things like it's like when you wake up and you've had a terrible sleep because you've had way too much to drink the night before, and your whoop is like, oh, you slept really badly last night. And you're like, yes, I'm hungover as all hell, so yes, I know I slept really badly. So you're like, sometimes these things can kind of like not necessarily be so useful. Hopefully, we're going to be more useful here. How it works? Okay, yeah, connect your data, performance signals. I think these 2 slides I feel are kind of the same thing, and maybe they're sort of the same thing for different markets. But again, coming back to the piece of like trying to dial back, like preserve slides where you can. You may sort of be able to combine them. It doesn't feel quite as like. Yeah, this one actually in some ways feels stronger because I can see more of the little screenshotty things, right? Because people like a good screenshot to be able to look at like the idea of how are you getting this idea into practice. Okay, market sizing. So this is our piece of how this looks like, right? So, okay, so commercial revenues. Now, let's talk about this. Let's talk about market sizing for a little bit. And Darren's had me have a lot of complaints about market sizing.
yeah.
Everyone has a different view on market sizing, and it's very tricky, I think, when you're really early to properly size a market, because there's a question of like, is the market going to grow? Is the market going to change? Like Shopify, for example, being a classic thing of where like they kind of the market grew and expanded as Shopify grew and expanded, right? E-commerce went from being big to massive. Not that it was small before Shopify appeared. But I think the tricky one for me is that this first vertical is probably not the sort of vertical that's going to be expanding vertical, right? It's going to be probably a fairly static vertical. Like there's only so many elite sports people, generally, broadly speaking, and I don't think it's going to be like suddenly. And so I think I sort of see why they've sort of put the content creator piece in, because then obviously that's a more of an expanding market, right?
Yeah.
Within the first vertical, though, you sort of say just the athletes alone, great. Like I wonder, and I would love some little footnotes here of where you're getting this or where you're estimating this data from. So 10-20% of revenue allocated performance, maybe, yeah, that makes a little bit of sense, maybe. I don't know. The sum at that, like, and then you sort of put $59 a month here, and I go, if I'm an elite athlete and this is really driving that much performance, $59 a month doesn't feel expensive enough. If your Whoop is 300 US a year, right, something like that, 330 US a year, that's what, $50 a month? Like, doesn't feel nearly enough. $25 a month. Doing math quickly. Yeah, $25 a month. Like, is this only double as valuable for a very, very elite athlete? I don't know. So I sort of wonder if that's like, if that quite makes sense. The second part here is to say like 3.5 mil ARR in our first vertical. Ooh, it feels like the market's too small.
It's such an interesting comment to say like it's not expensive enough. Like that's
I mean, no one's when you first launch anything, it's never expensive enough. Every founder learns a lesson of you double prices and conversion doesn't change. Sometimes conversion goes up, and you're like, oh, why do I have all these customers on this cheap price?
Like people like buying exclusive things, right? They like buying.
Yeah, but I think it's also like price in many ways. Like whether it's B2B software or consumer, like you pay for the iPhone and you expect the actual quality, right? Like, and that's why you buy the iPhone. Rather than the sort of like plasticky, Android that, is the Telstra store branded one. And so that the price comes with it, the signal as well as everything else, but also it shows the piece of that you care. And I think when in these sort of markets, in B2B, for example, is the piece of like, well, certainly exceptions occur, cough, cough, Oracle. Like generally speaking, it's sort of like, people pay the bajillions of dollars for Salesforce because ultimately it runs the beings of the company. And that's why they pay it. Like Salesforce could charge less, probably I wouldn't say could charge a lot more, I imagine. But like that is, I would say, the way that those things kind of work. So like you want to make sure, I think, and particularly since I imagine the elite athlete piece is going to be the group that you monetize the best. If $59 a month is the target, I go, ooh, is that really like enough? Competitor landscape. Okay, cool. So I know some of these bits. So we've kind of covered some bits of this. So this is where I sort of wonder a little bit of whether you can restructure this a little bit to be able to kind of, this probably could get covered earlier rather than sort of the continuous loop, aura type references throughout. So I think there's an interesting question there. But yeah, I mean, classic competitor landscape, we're the best, everyone else crosses. Phase is obviously an interesting one, haven't heard of it before. So, that sort of is, again, one of those things in the back of my head. I go, I should do a quick Google of that. Okay, so validation, workshops. Okay, so like workshops is interesting. I want to know a little bit more than just the workshop piece here of like workshops with who, right? And then that's the, like, with the target audience, to be like, give me some more specific concrete examples, and like be nice if, there's some pictures of the workshop and things like that as well. It's like, let's do a little bit of that. Interesting to kind of, build the subscriber waitlist of like this. I'd call this is also like the building the sort of like the expertise, sort of the key influencer, key market influencer space of like obviously being the expert in the space. Yeah, I mean, it's one of those tricky things of where like in this kind of context, like the question of, oh, great, did you enjoy my workshop? Would you download my app? Everyone's going to kind of say yes, probably. What's more interesting and kind of, I guess, the other part that it would be an interesting layer on top of this is the piece of like, of these workshops, like, are people paying for the workshops? How much are they paying? What is that like? Are we validating the price piece of saying, hey, like athletes already pay $100 to, like just hear some academic research and knowledge about how to train in their cycle. And if they pay $100 for it, like it makes good sense that they would pay more for, customized, blah, blah, and everything else. Like, I think there's that piece of where, the financial piece needs to really come through here, because obviously for this kind of business, particularly with the wedgie part of the market, the sharp end of the wedge, like we really need, you need to be able to show that monetization element, and everyone's going to worry about the monetization piece of this substantially. Business model. Okay, so S benefit. Now I've got a different fee. See, I can remember the math. So presumably that's going to be a versioning problem. That doesn't quite still feel enough. And I think if you have 3 tiers, everyone loves a 3-tier pricing model. Show me all 3. Like show me the 29, 59, 200, whatever it is. The sporting codes and teams. So this doesn't feel like enough. 30 to 50K doesn't feel like enough, and I wonder where the numbers come from. Because I think either or which of those two numbers, again, this is kind of the question from the that you'd ask the founder piece of like, which of those two places do you think you're going to net more revenue? Obviously, the sporting code, you're going to do one big contract and everything else, but then like, is that going to be worth more or less than 50 or 60 or 70 bucks a month per athlete in the elite segment, right? Assuming the elite segment. Fitness and wellness partnerships, yeah, we've got an affiliate trailing as well. Yeah, maybe sure, everyone adds affiliate eventually. Advertising is everyone's business model of when the time horizon is long enough. Forecast. Okay, so another good one, another great one to bring up here. So founders love to forecast profit. VCs hate forecasting profit because profit means you won't need us later on, for one thing. But secondly, kind of, I think it's good to show that the strategy here is to say, presumably what we want to do is we want to raise around $350,000 from the looks of the slide. And we think that at the end of the $350,000 around FY28, so 18 months or so, we're going to be roughly break even. Good answer. Then the question is like, okay, so when we get break even and everything else, we're 18 months down, what do we do then? right? And this slide says to me that the thinking of what we do then is we're going to go, okay, cool, we're going to just somehow, like 8x our revenue, well, maybe, without raising any more money, maybe. But then we're going to do that and then somehow net a, 75% net margin. I don't know. Like you can have a lot of sales and marketing costs and 8x your revenue, a lot of that. But then even then, like sort of, I think in the 18-month horizon, are you going to be in a, like if the idea of the FY29 strategy is to say that's when we're adding our second group and stuff like that, there's costs there. And so like saying we're going to get FY28, we're going to be unit economic neutral, then we're going to make a decision at that point. Either we raise to go after the big market or, investing in growth. In other words, like we're going to invest in growth. We're going to raise to invest in growth to go after the big market of the content creators and the wider fitness industry, everything else. Or we're going to have the option to be able to kind of bootstrap, so to say, off, semi-bootstrap off our elite market athlete piece. And, that obviously has a sort of long-term profit chain. But you got to remember that as a VC, and Angel's different to VCs in this context, as a VC, like our business model is ultimately, for our second fund, which we're just about to do our first check at the moment. Nice. For our second fund, ultimately, we'll, do say 30 investments, and probably realistically, somewhere between 1 and 5 of those will return all the money. And we need to return like, sort of at least 10 times, ideally 5 to 10 times our investors' money. So $30 million fund, we've got to return, $500 million would be lovely. Even, $100 million. And that means that, if we have 10%, a company has 10% holding at exit, a company has to sell for $1 billion for us to make sense in the financial sense, right? So that's where sort of like these things that make good logical sense as good businesses, and this is potentially a very good business, may not actually fit our business model. And that's the signaling piece of where as a founder, you've got to think about both, does it fit purely, but then also am I sending the right signal of what you think the market, what you want the business to be and how the business should look. The team, great, classic, like co-founder piece, the sort of the business founder, quote unquote, and the technical founder. Founder of Ops Pro. Is he a co-founder that is in-house, outsource? Answering question. Advisors, venture commercial advisors. Yeah. I mean, the other two are maybe more interesting than the commercial product advisors. And I think I say that because, like, again, as a VC, like a lot of the stuff that we do is, Googleable, so to say, ChatGPTable. And so I wonder, like, it's kind of one of those things of where I go, like, advisor, again, point of religion, people have very different views on advisor equity and advisor relationships early on in startups' lives. You'll have a very, very different view across the market about that. So be wary of the signals that can send both positive and negative. Like my religious view in that context is the best advisors are the ones that will open their wallet and put money into the company. And certainly as an angel, spend a lot of my time, giving free, so to say, advice, or advice, in fact, negative cost advice in terms of I'd invest to then give advice or a perspective of things. So, like can be one of those very controversial topics, polarizing maybe. Yeah. Okay, so $350K US. So there you go. We got the number right from the math, which is good. Thinking of a safe ValCap 3.5. Yeah, so I'd say aggressive, 10% raise, like aggressive, not wild. Sort of generally speaking, I'd say market is probably 15 to 20 at the moment, up to 25% dilution in the round. So 10% is probably a bit aggressive. Not a bad place for a founder to start, to be fair. But I think like you've got to be aware of that. The timeline piece doesn't quite make sense. Oh, okay, so the timeline is for this, I presume, is for this round. I don't know why the second is the second and third bullet. Second bullet isn't the value. I see that might be a typo, maybe. I don't know. We'll see. And raise target completion date. I don't know. So that second chart, I imagine, might be some typos in there. Use of funds. So I prefer these in a sort of pie charty kind of thing, or like a percentage-based thing, so you get an idea of where that sits as well. So like I want to kind of understand how much you're thinking in terms of like R&D cost versus sales and marketing cost versus G&A, transactional stuff, operation stuff. And then the seed round, right? So it's sort of go, okay, so seed round within 12 months, that isn't reflected in our financial data here, is it? I mean, it says total income, which doesn't include CapEx, like investment activities, but putting that aside, like that's not necessarily reflected in the finances. So it's where I go, there's some mixed messages going on here, which is again, one of those things of like, you want to be careful about what that looks like. Missing from this, I just saw, missing from this is the contact information for you. So stick your contact info on the deck. Easy one to do. Final slide, always the like little, here's my contact info. But a good deck, good, nice, simple. Like again, some good opportunities to tidy it up and polish it. But I think good narrative, and I understand the product space. I think just needing to really build out, for me at least, it's needing to build out that piece of how big does this get and how does this get really big. But that maybe that's if you want to be that. You may have a different view. But to raise $500,000 of this on this, you're probably going to need a bit of narrative like that. $500,000 Australian dollars, that is. You probably need a bit of narrative like that. Not necessarily. Like I could kind of see it being the sort of thing of, and again, maybe the thing that might be like a nice extra layer of this is like, sort of where's or I'm interested to understand, do we have, or, from our sort of, workshop conversations, everything like that, do we have the 100 grand committed, even 100 grand Aussie, 10 by 10K check from the elite athlete group? Like where's the, it doesn't have to be like an Andre Agassi or, like that level of elite athlete, but sort of like, is there a piece here of where part of the narrative can also be to say, hey, like within our kind of core ICP segment, we've also sort of, locked away some cash because they like this so much they want to invest in it. So give me that's a nice little validation proof point in these kind of worlds. And I imagine elite athletes might qualify as 708 compliant. Sorry, as sophisticated investors, so 708 compliant. I don't know. I imagine maybe not. Some would obviously, like the elite tennis player or AFL footballer would. But that is something you've got to think about as a founder. Sometimes is you got to remember that there's eligibility criteria for these things. You can do crowdfunding and things like that as well. So this could be an interesting crowdfunding opportunity, for example. I don't know.
Yeah. I think that's it for Ovexa.
That's it for the first one. Yep.
Yeah, I'd love to invite Svetlana, the founder, to call in if you're able to. Sometimes the process isn't as smooth as I would like, but if you're able to, there should be a button next to your audience options to choose to dial in, and we can have a quick conversation. But if not, feel free to drop some more questions down into the chat. Oh, here we go.
Excellent. We love a live audience.
Yeah, awesome.
Hello, Svetlana. Oh, nothing like live technical things.
Hugh,
There we go.
absolutely loved your comments, just kind of taking notes as I'm going, and a super helpful call to be able to see, because usually when I present this, there's a bit more context, there's a bit more background chitter chatter prior to actually me sending across the deck. So it was just so refreshing to hear kind of you sitting back and thinking, oh, okay, I would have done this. This is nice. Just really picking apart. Darren, love the format.
Awesome.
I guess my question is that it was interesting to start you kind of earlier on saying, oh, there's 1,000,001 of these kind of apps here, and with Ovexa, Phase is actually one of the closest competitors, and just recently we've discovered another very close lifestyle OS kind of competitor. I'm interested to see what others in this space that act as a calendar app at its core, or have I not done my messaging correctly where I've said, look, this is not a tracking app. This is the action layer between Wearables and your day-to-day diary.
Yeah, it's a good question. So I think it's a question, or my way of describing that would be around. For me, the competitive space. Oh, we want to mute her. There's a feedback.
Yeah.
Okay, Darren can work it out.
Yeah.
So there sort of is that space of where there may be few direct competitors, but lots of indirect competitors, right? So like one of your indirect competitors is going to be the journal or the Excel or the, like whatever. And I think you want to show, as a founder, you want to show a combination of where where's the blue ocean you're going to, swim, create and everything else. But also you want to sort of show that wider market of like what people are otherwise doing to achieve this, which is probably some combination of notes app, like journal, bits of paper, my generic fitness, like map my run, blah, 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 whatever. That is also kind of a competitor. And I think that's where, like, for me, that's where that piece of saying there's lots of things in this space is kind of like people tape together that sort of, I imagine, at least, people tape together these sort of solutions as a bit of Frankensteinian monster. And that's a good thing for you, right? Like, because you're sort of saying we get rid of the Frankenstein monster. But it's hard to, I think, you've kind of, broadly speaking, Whoop versus like the Garmin thing, I sort of go, well, they're kind of the same shit, right? These days, or increasingly more and more the same shit. And I think Flow, I can see easily where I go, okay, you're not a period tracking app, right? And that's where I go, okay, that one is actually less interesting for me. Like, that's where the piece for me is more the element of where maybe to your market, you are, that is more competitive. But I think I'd flesh out a bit more of that piece of outside of Phase. Sounds like great. Tell me a bit more about Phase, or I will Google a bit more about Phase in the sense of like, maybe there's a line here if they're like raised X dollars, which is the classic that founders often have as well, to sort of show the piece of others are investing a lot in this space. So has Phase raised a big bucket of money recently? And that can be a good sign to show, hey, like others are also seeing this market. So that's kind of where the comment comes from. Is more around the indirect competitors than the super direct.
Okay, thanks for that. And I guess last question is, say if we were to be raising a seed round, 2027, mid to late 2027, what would the metrics that you'd want to see, or kind of what would you want to see in Ovexa for you to say, no, I can't miss out on this?
I mean, so the simple answer is that for all VCs, traction solves all ills. So yeah. more traction, more traction, more excitement, no matter how it goes. That's why everyone says, you're too early. Is that just means they want to buy the call option to be able to invest later on. Yeah. What does that actually translate to? Like, I think to get in these days to get a 1 to 2 mil US round away, you need to have strong engagement growth. So in terms of like, both your like weekly actives or daily actives or whatever you're going to track, but then also like, what's that sort of top of funnel piece looking like in terms of like, are we seeing that sort of signs of that flywheel effect? And then secondly, you need to show what you think the monetization actually is going to look like. And that doesn't have to be, you have to have monetized to a substantial point. Like, it doesn't have to be, I think in more consumery things as you are, it's less like, oh, you won't get a seed round away without at least like $1 million or $2 million worth of, sort of notionally ARR. That's less so the case, but you need to have you've got to have a strong idea of saying, hey, we've shown we're going to be able to monetize like this. Like, the monetization capacity looks like this. But that might just be early monetization experiments, might be some one-off payments, might be some, you might have just sort of, done a couple of premium features, or you say, oh, we've built sort of like the cheap version and we're selling it for $100. And so when we build the expensive version, we sell it for $300. It'd be really easy. Or, whatever it might look like.
Okay, thanks for your feedback. Really appreciate it.
Thanks, Svetlana. I'm going to get going on the next one before I get cut off by Darren.
Yeah.
Ritually.
Thank you so much. Yes, ritually.
Thank you, Svetlana. Okay, so ritually, let's go. A personal execution system. Now, second brains are very hot right now. I saw one of these actually the other day at Latrobe. A weekly focus plan that adapts as priorities change. So, okay, interesting. So again, like I said, like there's a piece here of where second brain, whatever it is, that whole space is very hot right now, and very hot right now is a good thing. That means people think to themselves, where's my play in this world? But also means that lots of people are seeing the problem. It also means very competitive. So curious to see what this looks like. So weekly focus plan. So this doesn't yet say to me where our pointy end of the wedge is, right? And that's my sort of critique of this. Okay, so insight. So this is kind of the problem piece. Okay, so it's sort of, yeah, okay. So this is one of the problem sides of where I think it's the tricky part here is it's kind of one of those like things where you're saying something that people already know. Like, people know the piece of like, people love to do it's the tools as objects thing. If you know the reference to one of the blog posts from Will Menidis. But like the building the system and writing the to-do list being more exciting than doing the work. It's kind of one of those things of, people know that. So I wonder how much that really earns value. Or like, again, it's a bit of a nothing burger in terms of like, doesn't really tell me what that initial market or what that early piece really looks like. The real problem is not task. Again, like we know this, right? The problem isn't task management. The problem is never task management. And overwhelmed, interesting. So again, I saw literally this. So, with 3 slides in, I saw pretty much almost exactly the same thing presented differently on Thursday night last week. So, that's a positive sign. That's it's interesting seeing multiple people are seeing the same problem.
That is.
So, and again, we'll sort of see how this attacks the problem differently to how they did it. And I'm curious to see. So let's see where we go. Okay, so so we're still sort of in the problem space here, and I think this kind of is still repeating the same element that's fairly sort of high level of saying, hey, like we don't necessarily need lists and boards, like we need something else. And I still say it's interesting compared to the other one that I saw, for example, which was very, very specific in saying, and I won't name the company just in case, but they were very specific in saying hey, our market here is ADHD sufferers, people with attention deficit issues. There's lots of them, and and then you can sort of go, that's obvious why the existing list solutions don't really work, and blah blah, and that became a key part of how their actual how their kind of product was built and then how it was marketed and all that kind of stuff. So what I wonder about this so far is I sort of go, we're still in the world of sort of generic project management tools, and there's a big graveyard full of generic project management tools. An adaptive execution system, nice marketing language. I think what I always say with these things is take your logo off and put any competitor on your space's logo on the page. Yeah. Does it still hold true, right? And I could put Asana's logo on this, and they would probably say the same thing. And I probably can find almost exactly the same slide on the Asana website. So this is sort of again that piece of where I go, you're still selling me just generic project task management solutions. And so it hasn't really given me the special sauce yet, right? So I want to see more special sauce come out of this than necessarily sort of the broad. And I think the broader your market is project management, task management solutions, very, very broad market. The broader your market is, the more clear it is as to be what it is that's sort of unique and different about you. Because even this one, I sort of go, maybe borrowing Jira, I'm sure that the new iteration of, productivity tools probably would say that they take you out of lists and turn you into clarity. So the workflow. Plan, focus, reflect, improve. Okay. I sort of want to understand on this one, is this the start of where we're saying this is how we do things differently? Is this a getting things done, which is a project task management kind of to-do model of way of doing things, world of doing things, versus, EOS versus there's a million of them? Is this we're saying we're inventing a new thing and it's going to kind of be the 90.io of that space? I don't know. But I think we're kind of Pomodoroing. It still doesn't quite, again, I haven't quite gotten the product solution yet. I mean, we're still developing here. Who's it for? Okay, so solo founders, freelancers, both really hard markets. The instant I see those ones, I go, hard markets to do. Agency owners, similarly. Creatives, similarly. Operators, similarly. Really hard markets to work in. The kind of thing of where the building public world definitely makes it sound like there's lots of these people, but they don't pay for a lot of stuff. And that's where it's you've got to do a lot of $9 a month subscriptions to make it make sense. You've got to build a lot of stuff to get you $9 a month out of your solo founder. So tricky. I can kind of see that there's one argument to say, you look at things like Henry in New Zealand, started in New Zealand, that was sort of is the zero for freelancers. And they're very intentionally stayed in that kind of freelancer, small org world. And so you can definitely build a great business there and have a good business there, but tricky. And I think they worked in many ways because they can monetize through many different angles. Sort of more fintech solution. Why now? Yeah, more people work independently. Yes. But I mean, the tricky part is that sort of you say remote work is it's sort of are you an adjuvant? And this is the same thing with all the personal task tracking solutions for work, at least. Are you an adjuvant to the Asana, Trello, whatever it is that the org is using, or are you a replacement? And that's always the tricky thing when you're looking at a worker compared to a founder, because the founder chooses the tool for the org. The worker doesn't always choose the tool for the org, and that can sort of then generate some sort of weird, tricky, sort of things like that. AI changes expectations. Yeah, a little bit. I don't know how much it does in that. But again, point of religion. I don't know how much it does in that world. Emotions or practical. Again, that's sort of, I think, one of those things of where, yes, like the overwhelmed thing is a thing, sure. But like, again, every task management solution sells that one. Risk was none of the task management. Look at that. So again, I wonder a little bit here of whether or not, like, I put this in the bucket of put the Asana logo on this, it looks the same, right? And I think that's where looking feedback early users and partners. I think my feedback for this piece is like really work out what that narrow part, like so far we haven't really gotten like what we're doing that is truly different. And I think like in this kind of space, you need to have an approach and some sort of product language or product source or way of doing things that is like truly, that is like step change unique, like total step change. If it's just 10% better, people are already going to use Asana, right? So like, it's got to be like 1,000,000 times better for it to make sense. And so I think that's where you've got to really like narrow down on that. So, okay, there we go. We got to try. We can try. I have enough time to have a look at it. So I'm going to have a look at this product, right? So the other thing that's missing here is we go try it free. And I'm like, this hasn't actually said to me yet that there is a product.
Go for it.
Right? There's no real, like, we haven't had like, screenshots or, anything like that helps me sort of go, oh yes, okay, there's a live product going on here. Let me bring up a Chrome tab. I don't need to use the one that's currently being controlled by Claude. I can use a different one. There we go. Ritually, how do I spell it? 1 L, 2 L's. 1 L. Okay, let's bring this up. Stop sharing that window. Even better, a live demo.
Wow, this is such an interactive session.
I know. Well, it's fun. It's been like, again. So
it's good. Okay, ritually.
Okay, so this kind of GIF/YouTube videos is the sort of thing that will actually be quite useful in the deck, right? And maybe it was behind the QR code on the first slide, but a little bit of that sort of like, this is what actually is different. And like, so I look at this and I go, interesting. It feels a bit to me like I'm sure I could jump into Claude Code or Claude Cowork and tell it to drive Trello, Asana, and coach me to do the same thing. So that's where I go, like, how much is that going to, like, how competitive are you to that piece? Plan, launch. Okay, so, and I think it should be more obvious that this is presumably a like a sample of what you want to do. I guess sort of continues the last one because the visual difference doesn't, marking language there. Problem, blah, blah, like, it's it moves. I'm just going to click the start your first focus plan. What are we going to do? What are we going to work towards, Darren? Let's have a look. I'm a community manager.
Sure.
We'll quickly make our first focus plan. I'm a community manager wanting to launch a podcast series.
Accelerate. Yeah, sure. A podcast series.
For startup founders.
Yep.
To help them
scale
their businesses, launch and scale their businesses. I have an email newsletter and a regular vodcast series. That generates some contents. Yeah.
Wow, it's such a meta experience. Yeah.
Yep, but needs some more ideas and motivation. Motivation to get out there in front of my market.
That's it. Yeah.
Here we go. Let's go. Nothing like really clicking the review plan and the founder's probably going, I really hope this works.
Yeah.
I also have many times done a live demo and had it work terribly. This has happened
many times.
Let's have a look. Create a podcast series. Okay, so now, so far this plan, I'm going to critique the plan here, which is probably not so helpful, right? But like,
sure.
The plan here I'm curious to see how, like, this plan, I go, okay, this is the plan that we expected, right? It's kind of, this is the plan that we expected to come out. And I'm curious as to how it then translates this to something different. Because I could have said, I could have probably given the same prompt to ChatGPT and I probably would have spat out something like this, which is good, right? So you've like, gate one is like, have you hallucinated something random? No. But let's see where it goes. Boop, boop, boop. No loading state. There we go. Let's quickly create an account. Nothing like a good
same
Google
thing. It's
OAuth.
like it's like the same thing of
Oh, I didn't click calendar. Oops, sorry.
If we gave it more context, perhaps, but at the same time, it's like same problem. It's like, would it just be the same quality of output as ChatGPT or Claude?
Yeah, and that's what I'm curious. We're going to find out now. Like, what does it actually do that is different? Set a focus period. 1 week. Great. We can start today. Good UX, right? I will say good UX. Like, why do we, so just for move, startup founders guide. Move, create.
I mean, good UX and UI are always extremely underrated.
Recurring. Okay, so interesting way that this actually then structures out. I quite like the UX here. Like, well done with the UX. I see. The startup founders guys, what you've called the podcast. That's okay. Yeah. Okay. We didn't give it a name, so
sure.
Focus period. Now, should the focus period be 7 days or 5 days? I would say it should. Well, I mean, I don't know. It's a Wednesday, so start the focus period. Have a look. Okay. Missing loading state. Need a loading state? No? Okay. Not a loading state. Oh, nothing scheduled for today. Okay, so now I've got to view the board. Okay.
Okay.
I quite like this. Okay, so like the idea is I can start. Oh, you go. Okay, click a button. Don't drag. Oh, I see. Okay, resume. Okay, I don't mind it. I've got ordering. How much of it you see it's not drag and droppy, but drag and droppy is very irritating as a founder because you've got ordinals as well. But like people assume drag and droppy when they see this sort of interface.
This gives me shades of Trello.
Yeah, and like to be fair, that's a good thing insofar as that. But like you got to remember when you look like Trello, people will try and treat you like Trello, right? And so like you're gonna need the drag and droppy card thing. Oh, that happened. Look at that. So some weird sort of difference in things and some font differences here. Probably need some tidying, but again, that's tidy. That's not important stuff. It's like I don't mind it. Like so like looking at it so far. New check-in? I'm going to see what this does too. What changed? Darren felt very tired today. I felt very tired today. Hugh was a challenging co-host.
Yeah.
So I didn't get as much done. Done. Let's see what it does. Average reckons it was a 7 out of 10 day. There you go.
Wow.
I like that it automatically estimated a 7. I kind of like that. Okay.
Very interesting.
And what are my insights? Oh, it's tough. Now it's 28 out of 100. Okay, interesting. No, it's just so. Well, it's strange to kind of have this weird menu within menu thing. Okay, I will finish fiddling now. So actually, like quite a well built out product, right? And that didn't come through to me with the slides. And I'll go back to the slides. So that part of like we've actually like built it out. It sort of is live. Everything else didn't come through the slides until that very last bit here. And so I think a good opportunity to actually showcase what you've done so far, and also like showcase and explain to me a little bit more about what you think makes that flow different. I think actually like for a very early stage product, surprisingly good onboarding flow. Like you saw me, I got stuck a couple of times of like working out what next. I started to click around randomly, but actually pretty good compared to what I'd normally see from a startup at that stage. So impressive and well done there. But yeah, like I think the part that's missing for me is just that piece of where like who really is the early market, and how do you define that? How are you going to find them? And what is the real special source of what makes it different? I actually think the scaffolding and the way you've built out the way it kind of builds the tasks and the flow and the sequencing is actually quite smart and interesting. But again, I sort of go like, you've got to make it a lot better than me asking ChatGPT, Claude, whatever, to make tasks for me in Linear or Jira or Trello or Asana or whatever. And so, kind of what does that look like? And then similarly, maybe in this one, like maybe the answer to that is you actually say, well, we want to have the MCP into ChatGPT or Claude or whatever. So that's the other part as well. Is the founder, there's no team slide on this, missing team slide. Give us a team slide. Who are you?
The founder is in the audience.
Awesome.
It's Guri. if you would like to dial in, you can
You
feel
don't
free
have
to
to dial in, sure.
much like Svetlana did. If not, then we will go to a few more questions in the chat or some ad hoc conversation. Oh, yes. And let me drop our YouTube in here if you want to subscribe and keep an eye out for the upload. All of our previous other workshops have also been uploaded to the same channel. So please take a look at that. We've got some fun reels coming up.
Some fun reels, excellent.
Yeah.
Put it in your ritually. Put it in your ritually, Darren.
Yeah, I will. There's a good one from us in the last VC Tech breakdown, talking about how Elon Musk and Elizabeth Holmes are the same person.
There you go.
Excellent clip. Let me just scroll back up and go to some other questions. So let me take a look here. I think the first question we really got.
If you have a demo, recommend GIFs. Yes, I love, definitely recommend images, absolutely images, definitely images, because, like before I sort of saw that last bit, I assumed this was still a pie in the sky idea. So definitely images, like GIFs, links to videos. Sometimes can be useful, sometimes I don't always watch videos, depends on how, sort of how much time I feel, but that's because I don't like videos. Other people really like videos. So
yeah, like quick animations, anything that can really demonstrate a quick visual point, I think is what I found to be the most effective type of decks. We also had a question from CR. It's a general comment about SaaS in a crowded market, right? If the niche itself has been proven to be valuable, what is stopping an established player from implementing the features in their already pre-existing tools? Like, for example, for Ovexa, what's stopping Whoop from introducing a new, we're going to do like a new tier. If you're a woman, you can bump up your Whoop. This is our new feature that helps you track your cycle, stuff like that. What's stopping them?
Yeah, it's a good question. It's always the question of, it's we see the same question of every AI startup at the moment. Is why doesn't ChatGPT build this? Ritual is an easy example of that, right? And I think you've got to be able to show that piece of. Typically, the answer to that is always, right now the market is too small, or this is too niche, or it's not a focus. That's why they're not going to do it in the short term. And then long term, we'll see what happens. But usually the answer to that is that kind of piece, or sometimes it's the piece of you're going to grow a data moat, for example, or you're going to grow, by the time they sort of pick up the problem. Hello, Guri. Feel free to ask your questions in there. By the time they pick up the problem, it'll be too late, and we've already won the market. Could be the other angle of that.
I think so. I think what I've seen is it's the same thing with going to market with anything. I mean, technically anyone can replicate you somewhat, right? But it's just if you do it faster and for lack of a better term, better, and you execute more efficiently, then
and no matter what at the moment, I think in software, in a pure software piece, then all of the software is easy to build now, and I can say this because I had Claude running overnight, for example. It is easy asterisk to build. It's then the question of what do you actually build. So let me answer King Arthur. That's a good name.
Actually, a lot of questions come through.
So the services piece now.
This is such an interesting question.
I don't know. I really don't know. Now, look, I think part of that though is, I think one of the natural hedges that a lot of investors are looking at the moment is kind of how we bridge this world of what is the next private equity? Will the future law firm be a bajillion partners and a bajillion associates? Probably not. Will the next consulting firm be that? Will it still be a big firm A or McKinsey or KPMG or Deloitte or whatever? Probably. I think it's going to be really hard. It's kind of that classic incumbent sort of innovator's dilemma problem of where I can see the argument of saying the AI native services firm will come and become the next McKinsey, Deloitte, whatever. But then also part of the reason you hire the McKinsey Deloittes is the trust piece. I mean, KPMG has that gone for them. But like putting that piece aside, like it's a tricky piece because a lot of the time in the big end of services where the money is realistically, like the buy of, let me switch windows so I don't stop looking sideways. The buy of why people buy is sort of a different buy to purely an efficiency an efficiency problem. There's definitely going to be a piece of where we've got to keep, or we clearly need to keep, generating more efficiency. There's going to be no question that clients of law firms are going to want law firms to be more efficient. But I don't know. I don't know where I land on that one. I'd say it's still a developing issue. I think we have a sort of a firm, a company, I guess, in our pipeline at the moment that we're debating about, I guess. That is exactly that sort of piece of, is this a services firm? A lot of time, to be fair, a lot of time.
I was just going to say, I think I know the exact same one. Yeah.
Yeah. A lot of enterprise, to be fair, a lot of enterprisey, startup-y SaaS things start as a kind of services thing anyway, right? And historically, that's kind of been how it happened. So, so let me look at Lisa's question. So, question of how to structure a deck with a long-term futuristic vision with a long runway to market. Now,
this is
so. The simple answer to this is, what I care about is I care about the next 18 months and 10 years, and not a lot in between. So definitely something in the long-term futuristic vision, but the 10-year futuristic vision, not the 50-year. 50 years, I'll be dead. Yeah. I hopefully won't be dead, but I'll certainly be heading towards a Bupa retirement home. But like, sell me on the 10-year vision and sell me on the very near-term vision. But like people, I mean, like we've done deep tech investments. Deep tech investments are always that, but like you still have to have the sort of shorter-term piece of how you're going to measure success and what sort of traction, whichever form of traction it might be. It might be around research milestones or whatever it is. Those things are still important in terms of the short-term piece. But like that big vision piece is important. Like I said, I want to see how this is going to end up, returning a lot of cash. What's the one thing that stopped you or an investor at the next meeting? Good question, Guri. What's the thing that will stop me? Look, I think the thing that would stop me with it is that piece of clarity on who that early market is and why it's different. And I think that's what I would challenge you to think about and ponder and, like iterate on, I guess, both on the marketing side and the deck and everything else. It's like, it's an interesting product, as you saw. Like, I go, interesting. Would I like rush back to it? I mean, I used my task management as bits of paper. So I'm not a very good example of someone that uses any form of task management. But like, it's the kind of thing of, would I rush back to it? No, but that's just probably a little bit to do with me. But like, what is that really early market? I think is a really important question. You've got to really get some real clarity on to get that sort of message cut through if you want to sort of get that next meeting. So that's kind of my simple answer of the one thing is like, just not necessarily more product, just the clarity on who this is really for and why it's for them and who, or even who's using it, right? Like if it's solo founders or whatever. Do we fund deep tech startups in pure R&D phase pre-MVP? Yeah, absolutely. I'm about to do a deal that is extremely research phase. I can tell you now. I won't pre-announce it, but when it gets announced, you'll see it. So yeah, easy way to get our attention. So, Galileo Ventures, we have a structured form that we don't believe in we don't believe in warm intros or whatever. The easiest thing you can do is either send us an email or even better, fill out the form. It's a web form at apply.galileo.ventures. It means that you fill out my CRM for me. It's great. James wants to turn into a nice little AI chatbot thing, which maybe will be the good thing to do next. But that's probably the easiest way. But yeah, no sort of big gates of anything like that. We try and get through things quickly, and we try and give you some degree of feedback. As much
there
as
you go. I just dropped it into the chat.
Perfect. There you go. On the website, we still have to rebuild. So all startups.
Oh, tell me about it. We're still trying to.
Too many things.
Yeah, we have plans to rebuild our website too. TBD.
Exactly. Doesn't everyone?
TBD. Yeah, TBD. Well, thank you very much, everyone, for joining us today. Another great session of the VC Deck Breakdown. We will be back again on July 15. Roughly do these once a month with Hugh. If you are interested in getting your deck in, I put the link in on a Notion form. Sorry, it's not clickable earlier in the chat. So if you want to take a look at that, you can. But Tomorrow, we have a great event on, Founder Day. If you're already signed up, good. If you're not, it's already full. So if you do want to sign up, just get on our wait list. Maybe we'll let some people in, but it is a super exciting day. We've got experts coming in from Notion. We've got a 3-time YC founder. We've got the Claude Code ambassador coming in, finishing up with Svetlana and some pictures at night as well. It's going to be a great day. Come around for that or look out for the content that we will have online about it. But thank you very much, guys. Thank you, Hugh. And I'll catch you guys next time, okay? Thank you. Bye-bye.